Turkey's central bank left its one-week repo rate unchanged at 7.5% on Wednesday, refraining from monetary policy tweaks ahead of a June 7 parliamentary election that comes at a time of flagging growth and a volatile lira. All 19 economists polled by Reuters had expected the bank to leave rates on hold. President Recep Tayyip Erdoğan has halted his calls for rate cuts in recent weeks after they led to concerns about political interference in monetary policy. All 19 economists in a Reuters poll had expected the bank to leave rates on hold. Recently elevated volatility in the exchange rates has limited the improvement in core inflation, the bank said in a statement. This, combined with the uncertainty in global markets and volatility in energy and food prices, makes it necessary to maintain the cautious stance in monetary policy. The central bank left its one-week repo rate at 7.50% and overnight borrowing rate at 7.25%. The overnight lending rate stayed at 10.75%, and the primary dealer's overnight borrowing rate at 10.25%. Inflation rose more than expected in April, giving the central bank some room to dodge the pressure for rate cuts before June's parliamentary elections. Last month, the bank hiked the amount it pays on lira reserves and cut the cost of borrowing dollars in an attempt to shore up the battered lira. The lira hit a record low of 2.7435 against the dollar a month ago but made its biggest weekly gain in 3.5 years last week. After Wednesday's rate decision, the lira firmed slightly to 2.6030 from 2.6040 beforehand. The rebound in the lira last week was partly driven by expectations that while the ruling AK party could form a government on its own after a June vote, it may not get enough seats to enable it to change the constitution. Erdoğan may resume his pressure on the central bank to cut rates after the election. He has said high rates cause inflation, an argument that goes against mainstream economics, and those who defend them are guilty of treason, a comment that has unnerved financial markets. European Union finance ministers issued a veiled rebuke of Erdoğan's demands for lower rates last week, saying that conflicting Turkish monetary policy was failing to lower inflation and that a tighter stance was needed.